Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Java with Jared. Hope you guys are doing fantastic. Happy Friday. Hope you had a very wonderful week. Well, rates continued the positive trend, and they ended this week better than where they ended last week. And this is about 3 weeks that we've seen of improvements in interest rates, so that's fantastic. However, towards the end of the week, interest rates started to take a little bit of a breather. We didn't see much of a huge improvement. Actually, on Thursday, things got a little bit worse. But on Thursday, they did touch a level that we have not seen since October of last year. So we've seen a heck of a run-up in the price of mortgage-backed securities, which drives the yield down and gives us lower interest rates. And it only makes sense that that can't continue forever. So taking a bit of a breather, and we'll probably see some of that continue into the beginning of next week. That makes sense because things just can't always get better day after day after day. And we've seen a huge improvement over the last 3 weeks. Not a whole lot of economic data that was released this week, so pretty quiet week from an economic data front, but there was some interesting numbers that were released. First of all, the Mortgage Bankers Association released their weekly application index, and every week they measure how many purchase and refinance applications are being taken. And over the last few months, we've actually seen purchase applications down pretty considerably, and refinances just, really considerably. Prior to this week, purchase applications were down about 21% versus where they were last year. Refinance applications were down like 75%. So, and that kind of makes sense with how low rates were the beginning of last year. But again, the purchase market has been a little bit weak. Now, this week we did see that trend reverse. It showed an increase of about 9%. So now, year over year, it's about 16%, but still less purchase applications out there. Janet Yellen also spoke before Congress. No big surprises there. She did say that the Federal Reserve expects the economy to do a little bit better this year than last year. Last year really wasn't that great, so no big surprise there for the market to react to. But Janet Yellen also did say that the Federal Reserve will probably have a very highly accommodative stance in terms of interest rates for the remainder of this year, due to the slack in the labor market. So basically, Janet Yellen was saying that they recognize the weakness in the employment report last week, even though those headline numbers seem to be strong. When you peel back the onion, wasn't a very good employment number, and that the Federal Reserve does realize that and will keep interest rates pretty darn low. Another really interesting number I saw, there was a RealtyTrac released a statistic that about 43% of all residential transactions in the first quarter of 2014 were all cash. Again, almost half of all loans, or excuse me, all purchases in the residential market didn't have a loan. They were all cash. And so that also probably gives some pretty good reason why these purchase applications are down so much. So instead of getting a loan, people are just paying cash. Now, in the first quarter of 2013, that number was only 19%. So last quarter of 2013, it was 38%, and now we're up to 43%. So just the trend has continued. So what that's just showing is that there's probably just not a whole lot of confidence in there for people who have money to put their money in the stock market and have that money be at risk. They don't want to just keep it in the bank because there's just no return there, so they might as well just not finance at even a really historically low level and just pay cash. So I thought that was pretty interesting. So that's what happened this week with interest rates. Again, still great, and they are taking a little bit of a breather, and we'll let you know what happens next week. We're going to see a lot of economic data out there, so let's see if anything changes. Other than that, hope you have a very wonderful weekend. To all those moms out there, I hope you have a very wonderful Mother's Day, and here's to you. And if you're not a mom, please remember your mom and treat her well. Have a wonderful weekend. If you're working this weekend, so are we, so give us a call if you ever have any questions. Happy Mother's Day, and we'll talk to you next week. Bye-bye.